Hello guys, today I'm gonna talk about PVSRA. PVSRA is a toolbox that can be used for trading. I'm gonna show you how this can help you and how you can use it in a strategy to make money. PVSRA was a concept created in forex factory forums by two users, Trader at Home and Cigar Guy. I learned this and study in a YouTube channel called Japa Rico. You can search on YouTube. So all the credits go to these guys, Traded at Home, Cigar Guy and Japa Rico. PVSRA stands for Price Volume Support and Resistance Analysis. PVSRA itself. PVSRA is not a strategy itself, but is a toolbox that allows you to detect the market makers and understand when you should go in the market and what direction the market will move. Market makers. As you know, market makers are the people that move the market. Banks, big hedge funds. If you think about it, retail traders cannot move the market. Forex market is a $5 trillion per day market. I mean, it's insane to think that we can make a difference. Market makers move a lot of money and need to make profit, of course, because they are business. So they will fill the orders they want to do with the retail money and other dumb money. Market makers also can't hide, even using smart algorithms and stuff like that. Can you imagine an elephant in the kids pool? I mean, they move so much money that it's impossible for them to hide their moves. You have to understand that market makers are not evil. They are just doing their business. They want to make the money and they're gonna make it. And they want to make the move. So they need to do it in a way that is profitable for them. What we're gonna learn? We're gonna learn about price. In price we're gonna talk about key levels and how they are used by market makers. We're gonna learn about volume. Each time market makers are working in the market, you can see the volume changes. We're gonna also talk about support and resistance. We're gonna talk about when it works and when don't work. And we're gonna talk also a little bit about money management. Is one of the most important things in forex trading or stock trading, and good money management will make you money. Remember also that good things in life take time. Watch this video multiple times if you have to. Take notes, backtest it, practice make perfection. Remember that I want to give you tools here that you can use to create your own strategy. You don't need to use the strategy I'm gonna teach you here. But if you understand the market and how the market moves, you're gonna be able to make money. Also, like the video because this really helps the channel. The price divides in 4 concepts: key levels, the dragon, highs and lows, and EMAs. Now you're gonna see each one. Key levels usually have a lot of interaction, and you can expect rejections and accumulations in periods below and above the key levels. As you can see here, key levels are basically levels that have a round number, a quarter, a half number, or another quarter. You can see here, for example, this is USD GPY, and as you can see, 800 and 108 dollars, 108 yens 000 is a key level, is a strong key level because it's a round number. The quarter is gonna have some interaction as well. As you can see here, the price go here and end up hitting this area and go up. The quarter also gonna have some interaction. As you can see here, there is accumulation here below the key level. Usually market makers gonna do that. They're gonna do accumulations below the key levels. They're gonna, if they want to push the price up, what they're gonna do, they're gonna open buy, and then they push the price up. This is the half level, 108.50. As you can see, usually there is some interaction here, like some rejections, some accumulation above. What means? It means that market makers are preparing to push the price down. And as you can see, the price is going to interact where? Previous key level. Interact again. Here they push the price up, they remove everyone from the market, and they interact again in this area, as you can see. And these are key levels and are very important. Of course, you don't need to understand this now. I'm gonna show you how it works. Highs and lows are very important and are areas that have a lot of interaction and can work as a magnet. Monthly highs and monthly lows are really strong support and resistance areas and usually will attract the price, especially if it's not retested. You can expect the price to move to hold highs and lows, monthly highs and lows, if they are not retested. The same happen on weekly highs and lows. You can expect the price to be attracted to these highs and lows and retest these areas, and you can take advantage of that by, for example, counter trade when the price hit that area, stuff like that. Daily highs and lows are not so strong as weekly and monthly, but you can see some daily highs and lows work as a resistance or a support, especially if not tested before. We also gonna use in the PVSRA strategy exponential moving average is the 200 and 233 moving average. In the picture you can see that these moving averages are represented with a dashed line. You can see, and if you analyze charts, that a lot of times the price will reject in this area. So if the price cross the dragon, here is the blue dragon, you can expect some interaction in this area here. Volume is also really important. Is the second most important tool of this toolbox. Volume will allow us to know if market makers are working and what direction they want to move the market. PVSRA use 4 different colors to identify big changes in volume. So I'm gonna show you here in the chart. We have 4 colors for the volume. As you can see, what PVSRA do, these plugins, is automatically color the candle with the color relative to the volume. Basically, there are 4 colors. There is red, pink, blue, and green. The green one means that the candle was bullish, so the price went up. And the green one means that the volume here is 50% bigger than the average of the previous candles. The red one also means the same thing. The volume was 50% bigger than the average of the previous candles. The previous candles and also the previous volume. Then the pink one, it means that the volume was 25% bigger than the previous ones and is bearish. And the blue one is also 25% bigger than the previous ones and is bullish. So it's kind of, the pink one is a strong volume, but just 25% stronger. Blue one is 25% stronger, and the red and green is 50% stronger, so it's high volume. And what we're going to use the volume to is to detect places where there is a lot of volume, and we're going to use the volume to understand if the movement means something. When there is a breakout, for example, we're going to try to understand if it's really a breakout, for example, if it's not a fake out. So, for example, here you can see that this green candle that is really small have a lot of volume, as you can see, this massive volume. So this can tell us that maybe the market makers are doing something here. They are accumulating orders, and as you can see, then the price come here below these levels and then go up. It's like they accumulate orders in this area here, or they're actually doing the distribution here. As you can see, it's like here they accumulate a lot of orders, buy orders and sell orders also here,
As you can see, big volume here, and then they move the price up, and then they do the distribution. It's like they are selling the orders to people that think, oh, we'll keep going up, and actually don't. And then what you can expect here, maybe we'll hit these levels again, or hit these levels here. So remember that 4 colors, as you can see the colors in the candles here. So that's it about the volume. I'm gonna teach you how you can use the volume to trade. So stay tuned.
Support and resistance. In our strategy, we're gonna trade breakouts, but we're gonna enter just on the retracement. We're gonna use support and resistance areas to place to the trades. Key levels we're gonna use as magnets. We know that the price will try to go there. First step, I'm gonna teach you how to add these indicators. We are here on tradingview.com, and we're gonna go for indicators and strategies, and we're gonna search PVA, and then we're gonna add this PVA candle and dragon and PVA volume. The configuration I use here and here is the default one. I don't change anything. I also gonna tell you to add another indicator called WIQ that will allow you to see these key levels. For example, this is the quarter, this is the half level, and this is very important. Our strategy is really simple. Is we're gonna wait for a high to be formed, and then we're gonna wait for that high to be broken. And when that high is broken, we're gonna wait to see if the is broken with a high volume. For example, you can see the green candle here. It means that the volume is high. So this is the first thing, but we will not enter now. We're gonna wait for the price to back to the dragon. The dragon is this blue 50 EMA line. And as you can remember, here you have the 200 and 233 EMA. So what we're gonna do is, now that the price break above these highs with high volume, we're gonna wait for a retracement. And the retracement happened here, and as you can see, the retracement hits the dragon. And then we're gonna open a trade. Usually you want to have a tight stop, and I'm gonna put the stop here because it's not only below the dragon, it's also below the moving average. So I feel safe that the price, if not reject here, will maybe reject here, and is also at the level of this area here. And then I'm gonna target, I can target this high here. This is 1-to-1, or maybe I can target 5 pips. I feel comfortable. When you are targeting an area to trade, you need to be sure that, for example, let's say you are entering the trade here, you don't want to put take profit after the key level, because you know that usually key level is gonna reject, as you can see here, as you can see here. So you always have to keep this in mind. And I'm gonna target here for 5 pips. Is a scalping, so we're gonna enter really fast and we exit, and it's all good. There are some people that also use another strategy, that is wait for a key level to be broken with a high volume like this. Here you can see this. Let's see. Okay, here you can see key level broken with a high volume. So then you wait for the retracement in a key level, and then you enter. So this would be like here. You enter here, you put a tight stop maybe below these levels here, and you would target like 5 pips maybe. As you can see, it would be a fast man here. You need to use a broker that have a really low spreads, and also you need to keep in mind that this is just possible to do in pairs that have a lot of volume. So guys, this is the strategy. I hope you like it. You can mix a little bit stuff, like you can check, for example, when the rejection happens with high volume. For example, here you would lose this one. As you can see, it break with a real high volume. Let's see. If you enter here with a tight stop like 3 pips, there is no way you can do 5 pips here. Oh, actually you can. Okay, this was unexpected. Actually, you could enter here, went retest, and close here. Easy. Another win.
So guys, I hope you like this strategy. Please like and subscribe if you like it, and see you on the next one.